Hello, Stuart Heath here, CEO and founder of Harvard Grace Capital, with our second installment of our investment terms series. Hopefully this is helping you, and I appreciate you letting us know. We're drilling down a little bit more. Last week we talked about some broad economy related terms, and another one is a big one, fairly hard to understand. But we're going to start off with gross domestic product today, because this is sort of the key to understanding a lot of the other terms that you're going to hear in the news every day. Gross domestic product, also known as GDP, is, according to Investopedia, gross domestic product is the total monetary or market value of all the finished goods and services produced within a country's borders in a specific time period. So this is a term that is time bound. Think of it as profit and loss or sales, generally measured in quarters and then annualized, and it's a financial measurement. The value of goods and services, and generally it's applied to countries, can also be applied to a state or a city or whatnot. And so every quarter they will come out and say, the United States GDP rose by 2% over the same period last year, and things. At the end of the day, they're always giving you an annual rate so that you can compare sort of a trailing 12 months look, if you would. Now, so that's an important term to understand, because our next term, recession, is what's heard about, and these days you're hearing about the R word quite a bit. A recession is the retraction is the backing up of gross domestic product. Think of yourself driving in a car. Well, you can go 60 miles an hour, and you can slow down and go 40 miles an hour. That's not recession. But if you end up slowing down to a halt and then actually having to back up, that's recession. Traditionally, people don't hold to this definition anymore, but traditionally recession is defined as two fiscal calendar quarters of reductions in GDP. So instead of the GDP growing 2%, it perhaps retracted a quarter of a percent. And if that happens 2 quarters in a row, generally we're thought to be in recession. The opposite of recession is expansion, which is our normal case. Usually recessions don't last very long. And a lot of times you're out of it by the time you even knew that you were in it. Although people will talk about recessions all the time. What's inflation? Well, everybody understands it and they feel it these days. Inflation is the general increase in prices, and we've all been experiencing that since 2021, really. And here's another broad one that you hear: supply and demand. And for our economists who love to do their charts and whatever, and I should have had one here. The law of supply and demand is essentially, if a product is in demand, the price will go up, and ultimately the supply will increase. But in the short run, if a product is in demand and there's little supply, the price will go up. But as supply increases, prices will come down. It's all very common sense, but we see it in the real world every day at the gas pump. A big storm rolls through the Gulf of Mexico, and some refineries shut down for a week. Well, what happens? You've cut off your supply of gasoline. What happens at the pump? Gas prices go up because the supply is less than it was. And our last term for today is the Fed, and Fed funds. The Fed is essentially the colloquialism for the Federal Reserve, which is charged with monitoring the economy. They're charged with keeping inflation low and employment high. They also oversee and manage the banking system, and that's what Fed funds are, because the Fed controls the entire treasury of the United States and the money supply. And so out of that money supply, they will loan Fed funds to banks. Then the banks can turn around and do business, loan it to other, loan out to businesses and individuals and things of that nature. So each one of those has a different interest rate attached to it. Those are our 4 terms for today, 5 terms for today. Come back, check with us next week. Let us know if this is helpful at all. We'd appreciate that. And remember to go to our website, harvardgrace.com, and get the PDF that has all of our terms in it. We appreciate you watching, and thank you very much.